anywhere from 1 to 5, 1 being you know absolutely nothing, you've never traded an option before, and 5 being you are an expert trader, you have years of experience, you've been doing this, and you know the ins and outs. All right, so everybody just drop a 1 through 5 in the chat for me, so I know you are here and I know where we are at with everything. All right, so we got some 1s. That's good. It's good that we're all close, because then I'm not speaking one person's language and not another. Cool. So a lot of 1s. That's okay. All right, so with everyone having not too much experience then with options, if you could just tell me kind of what your goal is for trading in the chat. Are you trying to do residual income? So you just want to make regular reoccurring income every week, just a little extra, you know, so you can have a better Christmas each year? Are you trying to get rich quick? Are you trying to just kind of maximize your returns? What's the goal here? And then, so since everybody said that they were kind of starting off a little bit newer, except for maybe Sean, the first thing I want to say about options is that people overcomplicate them. Everybody overcomplicates them when they're teaching options. So when you start talking about the Greeks and the theta and the delta and the gamma and the puts and the calls and the selling versus buying, and it gets very overwhelming and very complicated very quick. At least it sounds like it, but it's not. And the trick is, so where I like to start with the people that I coach and with the people that I help get into options trading is we start by making it really, really simple. So just simplifying the thought. And so the simplest way to think about it is an option is just like anything else in the world. It's just something that you buy and sell. It's just you buy and sell options. Boom, that's it. It could be, now technically it is a contract, but if you just think about it as a thing that you buy, low, sell, high, just like you would a stock. And you don't need to make all the complicated references at first. Well, it's good to know that stuff, but at first you don't need all the extra stuff. So it's just another thing to buy and sell to make a profit. Now it is in the derivative form, so it does depend on the underlying equity, which would be the stock that the option is trading under. So if it's an options for Tesla, then it derives its value from the value of Tesla. I'm assuming everybody here knows what a call and a put is, but just in case you don't, a call is the option to buy that underlying stock at a certain price. So if you have a $130 call option for Apple, you have the right to buy Apple stock at $130 at that price tag anytime between the time you buy that contract and the time the contract expires. So the option is just a contract. So it's just like if you wrote up a contract, but sitting there with a lawyer and your friends and said, I'm giving you the right to do either buy or sell this thing by this date. So that thing could be anything if you think about it in terms of like a more concrete thing. So you could think like a house, or even as simple as like a pen. I'll give you the right to buy this pen for $10 anytime between now and next year. And now if this pen is worth $20, you're going to want to exercise that right. But if it's worth less than $10, well, then why would you want the right to buy it for something more expensive? So that's as simple as what a call contract is. And a put contract is just the right to sell something. So a good place to start with options if you want regular income coming in, or at least something way better than stocks. This is why stocks are always better than options. Don't buy stocks, sell options. Okay, so if you sell a put, you're selling someone else the right to sell you the stock. So if I wanted to buy 100 shares of Apple, if I buy the 100 shares of Apple and then Apple just stays the same price, I'm not making any money. But if I want to buy 100 shares of Apple, so instead of buying Apple, I sell the put, I'll sell Sean the right to sell me Apple at $130 a share. And now if Apple goes up, I sold you the right to sell me it cheaper, which you wouldn't want to do because you could sell it higher. So that options contract expires worthless, but you still sold that contract. So you get the money for the contract. So selling puts is like the easiest, most foolproof way to get into options and to start making some residual income with that. Now, a good way to maximize your potential return there is you don't just sell the put. You sell the put until it's exercised. So eventually somebody will exercise that and they'll want to sell you the 100 shares of Apple for 130 bucks. If the value of Apple went down to like 125 bucks or something. Now, to sell them that right, to sell them that put contract, you're getting the money for the put contract regardless. So you can get paid every single week, like $100 a week from now until that contract's exercised. Then once they exercise the contract, all you have to do is buy the shares of Apple from them at that price. Now, when you do that, now you own 100 shares of Apple at the $130 strike price. And now what you can do is you sell calls on that same stock that you now own the 100 shares of, because they're covered calls now that you own those shares. And you can sell the calls going forward. So that's called an options wheel strategy. And then once the call gets exercised, it forces you, or I mean, you're obligated to sell that underlying equity at the cost of the strike price of the contract. So by using the options wheel, you make money. Basically, you use a put as a buy order. It's a buy order. So you're saying, I want to buy this stock for this price. So I'm selling you the right to sell it to me at that price. That's your buy order. Hi, baby. I'm a single dad, so my kids won't stay there. I will change your pee and poop very soon. Okay, give me about 3 to 6 minutes. All right. All right. Okay. Sorry about that. But so if I instead of buying a stock, sell a put, and then you're getting paid to put in buy orders every week until your buy order gets accepted. So why not get paid to put in buy orders, right? And then once your buy order gets accepted or your put gets exercised and you own the 100 shares, instead of putting a sell order for your desired price and then just buying and selling, sell the call at the desired price. And if you sell the call, you get paid the premium no matter what. So that way, if your stock stays the same price forever. And this is a good strategy to start with, like a cheaper stock, because you do need the liquid to be able to buy it if you want to sell the put. So like a $20 stock is a great place to start, because you need $2,000 to be able to buy 100 shares of that. And you can sell the puts every week on it. So that's your buy order. And then every week you get paid. And then if it gets exercised, they take that 2,000, right? And you get the 100 shares, and then you sell a call on it every week, and then you get paid. And basically, you could take $2,000 and you can make anywhere from like 50 to $100 a week for forever. And then when it does get exercised, all you do is you sell it, so you get the money back, but you get more money than you spent on it. So you're using it as a swing trade and residual income. I tried to sell it, but I don't know why it says that my order is canceled at the end of the day. So if you tried to sell it, but your order got canceled, the price that you tried to sell it at, sorry, that came up in the chat. I'm a little bit ADD. But somebody asked in the chat, they said they tried to sell a put, but it says that the order got canceled at the end of the day. That just means that the price that you tried to sell it at didn't get picked up. The same way, that like if you're buying a call or if you go to buy a put at a certain price and you put the ask in the bid, so you have to sell it at the ask price. If you sell it at the ask price, it'll get picked up right away. All right, so first strategy I would teach people is just the options wheel. So instead of putting in buy orders and sell orders on stocks, sell puts and sell calls as an options wheel strategy. Does that make sense to everybody? Does everybody know that strategy? Does anybody have any questions on that strategy?
I've never used it yet.
Haven't used it yet? Does that sound like something that would fit you?
Probably later on down the line, once I get a little more experience under my belt. Like right now, I'm just a straight bull. I'm just buying calls that I see that are at least $2 or $3 up in price, and I'm jumping in and riding the momentum for anywhere from 20 minutes to an hour, and then I'm out.
Okay, so you're momentum day trading then. That's a strategy. So I honestly
like day trading, swing trading, because I do have some stuff that's out there for a week or 2 weeks, but usually I like to do my stuff right then within that week before it expires.
Definitely. I'm the same way. That's where I make my most money, is with the momentum trading. It's also probably what I'm the most hesitant to just go out and teach people right away. One, because the way that I do it is really valuable, so I'm gonna charge people to teach them that. But also, two, it's pretty complicated. You need to know a lot. So what I'm trying to do is I'm building out these different programs. Like the first program is going to be totally free, and I'm going to teach a bunch of basics and basic strategy. And my goal for that is to help people for free get the money coming in so that they can afford my more expensive programs, where I have like options alerts and I teach more advanced strategies, and we work on building like customized programs and customized plans for people to get them from like where they're at to where they want to be, and come up with a plan to get there. So I'm working on that. But in the meantime, I kind of want to know where everybody's at and what people want to learn. So I see we got a couple more people in here than we did before. So if everybody could just drop in the chat 1 through 5, your option experience level, with a 1 being you have no experience whatsoever, a 5 being you're an expert options trader. That would be fantastic. And if you have not yet, make sure you watch my videos that are already in the group that are just basically like, what is a call? What is a put? Why would you sell a covered call? Why would you sell a naked call, or whatever? That's a good question. Somebody asked, how do taxes work with options? Not as good as they do with stocks. So the good thing about stocks is you can hold them for a year and essentially have to only pay capital gains. With options, if you're trading options and just trading options, your profit's going to be income. So it's going to be like income taxes that you have to pay like you would as a contractor or something. So, and I'm not an accountant, so I can't really like go into too much detail there or give any advice there, but I can tell you that the more money you make, the more money they take, and that's in every profession and every way of doing things. So there's no way around that one. Also, we got 8 more minutes, guys. So if you have any specific urgent questions for me, make sure you drop those in the chat for me. What's up, buddy? I know I'm about to change his diaper in 8 minutes. All right. Oh, I said 6 minutes. I'm sorry. I meant 6 minutes. Okay. Actually, guys, give me 1 second. I'll be right back. I'm gonna change a poopy diaper. And think about those questions for me and drop them in the chat, because I want to help you guys out with whatever you need. And I don't know what you need if you don't tell me. So go ahead and drop those options in the chat while I change that.
Are you walking like this? Beep, 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 beep.
Okay, my kids are absolutely hilarious. Okay. Thanks, Fidelity, and for day trading says I cannot sell the stock unless I have bought with unsettled cash. How much cash do you normally keep available so you don't run into selling a stock? Not 100% sure. It sounds like you're using margin maybe in Fidelity. I'm not sure. That was Javier's question. I'm not sure exactly how that works. But I like to keep a lot of cash. So go ahead, Javier. I see you could.
Hey, so essentially I call, I see you posting a lot of stuff about how some stocks, I mean, you just talked about it too, right? How some stocks, sometimes they go up and then you want to sell quickly.
Uh-huh.
So I call Fidelity because I've never day traded before. I really just got started. And what they said, so I was buying a stock that you recommended to buy for a couple hours. This a few days ago.
Sure.
I got a notification saying if you sell this stock, because I was buying it. So basically unsettled cash with Fidelity is money that you transfer that hasn't been clear, right? That hasn't cleared Fidelity. So I was buying, because Fidelity will give you credit for the money right away, right? Or if you sell a stock, it may take like 2 or 3 days for that to happen also. So Fidelity basically gave me a notification saying if you sell this stock, you're going to run into some trouble because the money that you're using to buy it is not settled cash, right? I don't know if, does that make any sense?
Yes. So it sounds like you're on a cash account. Is that true?
Yes. Yes.
That's it. So there's a couple ways around that. And if you get approved, they probably have where you can apply for a margin account. And now don't blow through all your margin money and gamble it all away on options contracts, but not that options contracts are gambling, but that's another story. Anyways, don't be risky with that money, but you can use it so that you don't have to wait 2 days for money to settle and then go. But then they might not let you day trade unless you have more than 25K in there. So most places you need 25,000 to day trade, or you can use a cash account. With a cash account, though, you do have to usually wait 24 to 48 hours for the transactions to settle. So it's okay. I would just start a little slower. It sounds like maybe we're going a little too fast.
Okay.
Also, if you buy options instead of buying, did you buy the stock or did you buy the option?
About the stock.
So if you bought the stock, I mean, $100 is not going to go very far if you're buying a stock, but $100 if you're buying an option can go real far, you know?
Okay. Yeah, I'm just new to like options and all this stuff. So I'm curious to like learn it really how you do it, you know, how
Totally.
to do it. So it sounds like I need to watch some of your old videos too.
Yeah, that would help. There's only a handful of them. There's like 5 of them in the group. Another thing, I'm gonna do like a live trading session with you guys where you could just watch me trade. The reason I haven't done that yet is because I give it a lot of attention. Like I'm like laser focused on my screen. I won't be taking any questions or be able to be distracted. I laser focus on what I'm doing. But I could probably do that while kind of explaining what I'm doing. Like I could probably, okay, I'm entering here because I see this pattern, and okay, I'm exiting here because I see this pattern is starting to form, and okay, now it's making a cup and handle, so I'm gonna get back in because I know this is about to blow. And so just really getting into reading the charts and how I make my calls, make my plays, and decide what I'm going to do. But I follow 3 different strategies really, and I recommend that everybody comes up kind of with their own, not their own strategies, follow the same strategies that have always worked for everybody, but their own kind of playbook of what those strategies are. So you could be momentum day trading, you could just be selling puts, you could be doing an options wheel strategy. You could just be buying calls and you think they're going to pop before the expiration. I mean, that's one way to do it. Some people have good intuition or good foresight there. So let me take 2 more questions. I got 2 more minutes. If you're getting back into trading after blowing through an account, how much to run a successful play or to go to make special money? If I was just getting into trading again and I'd blown my entire account, funny story, I actually went from a $80,000 account to a $10,000 account and back to $100,000. So you can lose it all, make it all back pretty quickly. But I would start small. I would get like some $10 to $30 contracts and just go from there. Start with the stocks, like the SPAC stocks are the best because the SPACs are starting off like between 10 and 15 bucks a pop. So the contracts, if you get them before the news and the mergers and all this stuff's coming out, so that's why I recommend it. So first of all, anything I say is not financial advice. I'm not a fiduciary and all that good stuff, but I did GHI, I think it's GHIV, HGIV, whatever I was just posting about. PSTH are 2 SPACs that are starting to get some momentum, but they don't have any news or anything really popping off yet, but they will. So if I was just starting off and I only had a couple bucks in my pocket, what I would probably do is I would get some calls on a SPAC that is going to pop in the future. I just don't know when because the premium won't be as high. So does that help? Andre, am I saying that right? Andre. Anyways, look at the SPACs, watch my watch list, find something in there that's around like between, 10 and 30 bucks for the underlying equity for the stock that you're buying the contract on, because that's going to keep your premiums around, and then get it close to the money call, but not too. It doesn't necessarily have to be in the money, but I would go close to the money if I were you. And then you can be pretty certain that thing's gonna get some positive. Then just do it slow, get a $100 contract, try and double it. Now you have a $200 account, and then buy 2 different contracts and try and double them. And I'd be happy with 100% returns on those for sure. Though, if you want some Christmas Cheetos, I got 2 minutes left, buddy. 2 minutes. All right. So is the 3 and 4 bar play one of the best indicators to go off of when you're just looking to invest quickly and get out quickly? I love the 3 bar play for day trades. Yeah, I'll definitely watch that. I want to say it's the best, but it's good. It works. It works for quick returns, definitely.
Okay.
Might not always get you the biggest returns, but it'll probably get you the quickest returns.
All right, cool.
I sold a Fubo $40 call for $115 in early December for $200 when it was 26 bucks. Flew up last week. I had no idea what to do with it. So, Alicia, it Alicia? Alicia, did you sell the call naked? So as in you don't own stock? You're unmuted, but I can't hear you.
No, I had the stock.
Oh, okay, you had the stock. So you sold a $40 covered call then that expires 1/15 in early December. You sold it when it was 26. It flew up last week and you have no idea what to do with it. Well, there's nothing you can do with it. You already sold it.
Yes.
So you just have to wait and pray that Fubo goes down to $39.99 for a split second on
Right.
January 15th, which it might. It was actually going down. I was actually buying calls on Thursday.
I know.
Going down so much. I think it'll pop back up. It's the disadvantage.
So should I have bought it back, or should I have sold it back or bought it back, or just
So
let
that's
it
how you
keep doing
close your
its thing?
position. So when you see where it says like buy to close, sell to close, how you close your position would be by buying that call back. If you sold
Yes.
the call,
Yes.
you can buy it back. And that's up to you. I mean, in the moment, it kind of depends on what the stock's doing at the time.
It was up at $60. But to buy it back was going to be like,
Yeah, there's really no point to buy
$1,400.
it back, because what I would do is I would just buy a call at a different strike usually. So have you ever heard of spreads?
yeah, but I don't know how to do those.
It's pretty simple. So you could do it without owning the stock. So instead of owning Fubo, you would own the call. So you could buy a
Okay.
call for FUBO at $40, but then you sell a call at $45. Now, if Fubo ends at $44.50, you're golden. You made $450 off the call, and you made all of your premium off the call that you sold. And so you make the most.
Okay.
But if it goes to 50, all you have to do is exercise your $40 call to fulfill the $45 call that you sold, and then you make the profit from the buying and selling there, and the profit from the premium.
Okay. So you wouldn't have closed it though and paid the extra money. You would have just let it go.
No, I try and close it in the other direction. So like I'll sell
Right.
a put as the stock's going up, and then eventually the put will go down to be worth like 10 bucks, 10 cents, and I'll buy it back to close
Okay.
my position really quick right there. Okay. Basic question: benefits of options
Okay.
versus trading stocks. That's a great question. And one person asked if I also watch the Greeks. I don't watch the Greeks for momentum day trading. I only watch the Greeks for long-term investments and longer swing trades. But for day trading, there's no point. And really, even for like a trade for the week, if I'm getting in something, I'm expecting it to go. So if it's going to go so much, it's going to blow through the Greeks to the point where they don't matter. And then, okay, so benefits of options versus trading stocks. So the main thing, the biggest benefit of options versus trading stocks is, well, so for example, with the options wheel strategy, you get paid to put in a buy order. Right now, if you go to buy a stock, if I want to buy SPCE and I want to buy it for 20 bucks, I have to put in a buy order, and then it probably won't get accepted, and I just wasted some time. That's all I do with my day. But if I sell a put, I'm going to get paid for that buy order. And now I have to buy it, yeah, if it gets accepted, but I'm gonna get paid for it. So you might as well get paid to put in buy orders. And then instead of selling your stocks, if you sell calls, you're getting paid to put in sell orders. So it's like the options wheel is an easy way that's much better than stocks to get paid to put in buy and sell orders to buy and sell stocks. So it's almost a way to trade stocks, but to get paid for trading stocks, whether or not they do what you expect them to or not. It's a foolproof way to get paid something. And then by doing that, you're hedging your risk, because you're getting paid no matter what, even if it's just taking away from a loss. You were going to lose that no matter what if you would have bought the stock if it goes down too much. Another reason that it's beneficial is like, so my boy Ian in here, he had $100 to work with to get some stocks. Now he wasn't approved for options trading yet, so I had him grab some stocks, and now he has 117 bucks. So he actually had a 17% return. But if he would have bought options contracts for the same amount of money, $100 worth of options contracts on the same stocks that went up last week, he wouldn't have $117 right now. He'd have like 800 bucks or 700 bucks. He'd have a bunch of freaking money is what he'd have. You know, since the multiples of what you make are just so much greater. So to me, they're less risky. As long as you know what you're doing, it's much less risky, because you can guarantee income by doing things like selling puts, selling calls. And then you can leverage the money that you have. So if you only have a small amount of money, 10 bucks, 50 bucks, 100 bucks, you can leverage that to do what the big boys are doing. So like I buy and sell 100 shares of Tesla left and right. I don't really have enough money to just be buying and selling hundreds and hundreds of shares of Tesla. I could never do that. You know, just to sell 200 shares of Tesla, I need 120 grand. So like, I mean, I have it, but that would be my only trade for the whole freaking week, right? So instead of that, I can spend $1,000 on a contract to have access to those 100 shares and just buy and sell that. So it's a way to really leverage a much smaller amount of money to make a much larger amount of money as opposed to just buying and selling the stock. All right, we got 2 minutes and 30 seconds left. So if anybody has anything pressing, I'll be happy to get to it. If not, I'll do these probably once a week until I actually like launch a more official program. I'm also putting together a basics options trading course that's going to be totally free. I'm just going to give it away. I'm building the course out now. I might use some of these videos in it. So hope I have your permission to do that. Nothing else, guys? Cool. Well, in my last 2 minutes, I'm just going to tell you what my offer is for people with the free stuff that I'm going to be giving, because I'm working on building this out. I got 2 minutes. I don't like to waste no time. So first thing I'm going to do is level 1 is going to be, I guess I could probably just share my screen here. Then so my goal with each of these is to get people to the next level. So level 1 is going to be basic. You'll get my free video posts. You'll get the free Facebook group that you're probably already in. I get free trading tips, and then I also give like a free watch list every week. Now in my next level up, I'm going to give 1 high conviction option call per week. So every week I'll tell you like one of my highest conviction trades that I'm in for the week. Also, I'll give you the daily watch list. That'll be like alerts, so you'll get them quick. I'll tell you which direction I think they're going. It won't just be a list of tickers. And then you also get the basics trading course that I'm working on now. This is going to be like 19 bucks a week. And then the next level up, I'm going to do 5 high conviction option trades per week. The daily Pitbull watch list, which is going to give you supports, resistance, recommended entry, recommended exits. I'm going to do all the due diligence for you. I'm going to give you a trader's cheat sheet on every single pick that I give you. You'll be getting instant alerts every day, bullish and bearish picks, advanced options courses. And we'll have a private Facebook group that's separate from the free one where we just talk about. So it'll be like more skilled traders. But my goal is if you do my free trading, you'll be able to pay me 20 bucks a week to do the starter program. And if you do my starter program, you'll make enough off of this to be able to see the value in it to pay me 50 bucks a week. And then this last one is just for the people who are really doing it. And this one's going to be 24,000 or 2K a month for the year. And that's going to be live trading with me 5 days a week, my Millionaire Trader Lifestyle course, customized trader strategy. So just working together one-on-one, really like a one-on-one coaching program. And I'm also, with this one, I'm going to do live trading once a week. I'm going to give you some samples of this too. I'm going to try it. So I got less than a minute left. We'll wrap this up. I just want to kind of give you guys a brief little